Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 4th. My name is Eric Wilkinson and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Yesterday, being a bank holiday here in the United States, we didn't have any economic data released, but across the pond, we did get some manufacturing PMI, but remember, it's not the flash PMI estimates, so therefore it's not as widely looked at as the flash, so it's just a regular PMI number. One thing we did get out of Great Britain was manufacturing PMI. It came in at 52.8, expected to be 53.9. So let's talk about this day's economic data. That was yesterday, so let's talk about today. And we got across the pond the inflation report gauge really came in line with expectations. That's out of Great Britain. Here in the United States, we got a couple of our own economic data points coming up, and we had manufacturing PMI, final manufacturing PMI for the United States came in at 54.7, and the ISM manufacturing PMI, which is the more important number to look at, that's our most robust number, came in at 61.3, higher than the expected 57.5. So nice win on that one. But construction spending waned just slightly. It was supposed to be a 0.5%, came in at 0.1%, so lower than expected there. They did revise last month's number up about 0.3 of a point from negative 1.1 to negative 0.8, so almost a wash there. And then ISM manufacturing prices came in at 72.1, expected to be 70.4.0, so lower than expected there. And a lot of us, including myself, thought that the tariffs were really going to start spiking some of these manufacturing prices, but we're really not seeing that show up. Also, for the rest of the day, we have total vehicle sales. Some of the things already coming in is that we're seeing a lot of robustness, a lot of SUV sales, and a pullback on some of the hot rods, the American muscle, if you will. So a lot of people moving away from the cars and into the SUVs, even more so than what we were expecting. All right, on to the overall markets. We've got crude oil spiked up, probably on that SUV thing, the gas guzzlers. Came in and busted above that 61.8 Fibonacci level. But again, once we get up in those 70s, we really start seeing that pullback happening, as I think that there isn't enough demand at this point to compensate for those types of prices. So that always has that's having a tendency at this point to kind of roll itself over. We are still in the 70s, but that 61.8 Fibonacci holding as of right now, and the value area low being right there below it. It's going to act as a magnet, but a lot of convergence happening right there at that 50 Fibonacci. So hard to read the tea leaves on crude oil. I think it's going to want to stay a little bit lower. Gold moving below that 1,200 a troy ounce mark. That was a major psychological level I've been talking about. It broke down there today below that. Not much resistance whatsoever. Kind of peeled right through that 9-day moving average as we see right here. Should have acted as a little bit of a support for the short term, but did not happen today. We are down near the lows of the day and below that 1,200 mark, which is pretty big deal. That being said, we've got Bitcoin moving higher by about 300 points and $300 anyway, and above that 7,000 mark. So that's a good, solid place for the bulls in Bitcoin. They want to try and start pushing this market a little bit higher. And we do have a tweezer bottom here where it came down and tested this 100 Fibonacci retracement, third time down. Usually we call that third time through. We didn't see that, which is making me believe that there is a lot of strength or a lot of demand at those levels. So that being said, we're pushing up and away from that. I'm a bit surprised that the third time through isn't really happening. Bonds coming off, good economic data across the board for the most part. That's going to make bonds a little bit weak on the pricing, as we see here, as the expectation of interest rates moving higher. So bonds are moving lower right there where the market perceives value. So I don't really see it going too much lower than this, but they are down a full point on the day. Now the VIX is starting to spike because we've got the equities moving lower. There's a lot of noise out there right now, especially with Brazil, emerging markets, things of that nature. Even Nike kind of throwing a bit of a wet blanket on the overall markets as well. But we've got the NASDAQ down about 60 some odd points. A little bit of a tweezer top here happening. We went up and tested that, pretty close to it anyway, and have since started coming off since the open. There's a little bit of long overnight inventory where we'll see on the E-mini S&Ps, but you can see overall markets near the lows of their day with the E-mini S&Ps as well. This is what I was talking about. Overnight inventory tried to get long, and then coming into today, day session anyway, we started slamming down. You know, we were open over the futures were open yesterday, but not a lot of people trading that, as you can see there. But then overnight inventory flushed out to the downside, almost even got short. So coming into the morning session off the economic data, we rallied and have since lost all of that. Again, it's not easy to read what's going on right now, what the directionality is, but my feeling is it feels like it's a little heavy here and may want to start rotating down a little bit going forward. It just it's feeling a little heavy in these markets. All right, a couple of things that I'm looking to do. Google, I've got a itchy trigger finger on this. I haven't covered it yet, but I'm looking to cover it. If you guys remember, I have on the September 1,100 puts in there. I'm short from when there was high volatility. Everything's come out. It's trading less than $2. I've talked about this. I'm trying to squeeze this out just a little bit, but $20 move to the downside's got me a little bit nervous. If it looks like it's going to go below this 50-day moving average, I'll probably pull the ripcord on that trade. But right now, it is being held up by that. And if we finish right here, it almost looks like there's a bit of a support happening here. So just keeping a real close eye on this one right now. Like I said, those 111 puts, I originally sold them for $5. They're trading less than $2. That is well over and above what my mandate is for covering at 50% of max profit on this. But I talked about this. I'm so far away. It was such a great trade. I'm just keeping a diligent eye on it. I did it really small, so I'm kind of allowing myself a little bit more breathing room with this one and holding off a little bit longer. But as you can see, it broke below that 1200 mark, and that has made me a little bit more aggressive as to whether or not I'm going to cover this trade or not. EWZ, which is the ETF for Brazil for the most part. I don't know if a lot of people saw what happened in Brazil. I'm sure everybody did, but a 200-year-old museum that had over 20 million artifacts in it has completely been burned to the ground for the most part. What I'm hearing, the only thing that survived were meteorites that they had found. So very devastating. That should not really affect the overall Brazil thing, but it just is top of mind with that being said. And with this Brazil trade, if you guys remember, I put this on quite a while ago actually, and I went in and sold the September 36 calls in there for 40 cents, and I bought them back this morning for 10 cents with the move lower. Really allowed me to get out of that trade for better than 50% of my max profit. I probably could have gotten it maybe on Thursday of last week, but Friday's rally kind of took that out of the picture. Today slammed down almost near a tweezer bottom, so it might be a time to start playing this to the upside. We'll have to keep an eye on that, but as of right now, I'm out of EWZ. And then finally, this is what I was talking about with Nike. A lot of turmoil going on in and around Nike. I don't have a position in Nike, don't really plan to, but Colin Kaepernick is the face of Nike right now, and there's a lot of things being said about their new ad campaign. So that's why Nike is down on the day. Just thought I needed to talk about it because of Twitter and everyone else. doesn't seem like you can turn around and find anything other than what Nike's doing right now. That being said, volatility is rising. I did think about trying to do a strategy around this, but I don't think the volatility is going to come out before their earnings. All right, so I'm going to stay away from Nike. That's about it for me today. Other than later on this afternoon, I'm going to be doing a short webinar with a group of people, and it is on the. I'm going to be talking about how to stay mechanical and how to make sure that we are staying diligent with this, increasing our probability. So this is going to be with the Festival of Trading today, so you can check that out. Go to protraderstrategies.com, or you can go to tigersharktrading.com and sign up for that. I'm going to be talking about some good stuff that not a lot of people other than floor traders really talk about, so you get the inside scoop on that. All right, so check that out. And Thursday's webinar, might take a year for me to get over this whole Friday webinar thing, but it is on Thursday, and we're going to be talking about how to defend strategies. So I'm going to go into details on several different strategies, how to stay mechanical when these things are going against you. I know you guys keep an eye on that when I'm doing my daily market commentaries and things of that nature, but I'm going to be going into a little bit more detail, hopefully for you, in that webinar. So check it out at protraderstrategies.com. All right, so if you can't take that, take it easy.